for the day. It is 28th of March, Friday, and let's begin with gold, where the wave counts are telling us a clear story that might be very interesting and worth keeping a note of. Okay, so I'm just adjusting the waves here, the screen, so that all waves are visible to us. All right, so now looking at the overall rally, that there's minor wave 3, minor wave 4, and we are positively in the minor wave 5. Within that minor wave 5, gold has also completed wave 1, 2, uh, potentially wave 3, 4, and now it is almost complete wave 5, or wave 5 is just about one more high away. I'm talking about minute wave 5. And within the minute wave 5, if we look at the subdivisions, the minute wave 1, wave 2, wave 3, wave 4 are complete, and minute wave 5 is just about to complete, or it is already completed. Alright, so looking at the wave structure, uh, now that Fibonacci ratio was bit, was the initial wave 1 to 3 and then 4. Alright, that is pointing towards 3092. And today's high, which is print, was around 3086, if I'm not wrong. So it is almost hit that particular 0.618 target, which was projected as wave 5. Let's also try the parallel channel. If we do wave 2 and 4 and then wave 5, wave 3 touch, you see that it is hardly a few points left. It's just about a few points left to test the channel. So if we keep the channel as it is, then I would not be surprised if there might be just one more high. Maybe it might want to pip that channel, penetrate that channel, rally towards the 3100 zone, and then come back strongly. That would actually complete the 5 wave rally at a minute degree, and eventually it would also complete the fifth wave at now the fifth wave. I haven't taken the extension of the minor degree waves, so if you want me to do that, I think they're here. The minor degree waves extensions are here. It is the 3000 was the first one, and the second one is extending all the way towards 3276. Now it's quite possible that it rallies through the 3276 zone, but we've got to pay attention at the 3120 zone, which is also a strong resistance, and 5 wave rally completes. I mean, sub-minute wave 5 also completes, and then minute wave 5 is also completing. So it's quite possible that 31, 31, 30 could be a major top in place in gold. All right, so let us be. I mean, I'm not suggesting. Okay, we were not suggesting to go short. And if you were making profits last Friday, we never went short in gold, and we don't intend to go short right now as well. But we are looking at the price action very closely, and any trend above the 31, 3100, 3130, I think we would be placing a limit order in the portal, maybe today, tonight, during the New York session, or we've already entered the New York session anyways, but it could be on Monday as well, before before prices turn lower again. So believe it or not, rather than okay, if you're inclined to remain on the long side, then have your limit orders in place around the 3090, or maybe 331 3100. because staying too long is really not recommended because there might be a sharp reaction just around the channel line resistance. That's where the thrust wave would I mean throw over would build up, and then again prices may reverse very sharply. So you got to be a bit careful if prices rally all the way towards the 3100 mark and reverse sharply from there on. All right, so that's the case in gold. Now, trading point of view, no shorts recommended. If you're still long, you might want to take profits around the 3100 channel resistance. I mean, we're not expecting prices to hold for much longer beyond 3120 or 30. All right, and then maybe aggressive traders might want to place their limit orders to sell around the 3100 handle or possibly 3130 handle. So just a bit of, or maybe a couple of more sessions, maybe on Monday or I think in the next week anytime, gold might produce a meaningful top and then reverse very sharply. We are looking for that point of confliction where we can really sell gold harder. All right, with a decent risk reward ratio, of course. And there you see, with all the highs which is being printed today, prices are still lower in terms of the RSI. So RSI is producing a bearish divergence already. All right, so we need to keep that in mind, that bearish divergence is a strong indicator of a potential trend reversal. I mean, no matter whatever stories we are hearing fundamentally, these are the times when we need to really be careful and not be much greedy about gold rallying beyond 3130. All right, so be a bit careful. There is a bearish divergence, strong bearish divergence, which is seen not only on the 4-hour chart, but I think it is also on the daily chart. So we've got to be a bit careful, bit vigilant of what gold could be doing right now. All right. Okay. Now let's move on to the Euro USDs and the dollar indexes and the GBP USD. Our 4-hour time frame for euro is suggesting that we might have gotten a lower degree wave 1 and 2 in place, or maybe wave 2 is still working on over here. If I flip the chart to an hourly, then you might see potential wave 1 expanded flat, wave 2 complete, or it is still in the making. All right, so that could be the first indication of an extended rally in euro as the third wave resumes of a lower degree. Keeping that in mind, trade recommendation, okay, we are already above the 800 handle now after staying almost below the 750 handle overnight. So it could be time for bulls to be back in control, and if you're still sitting on the sidelines as we speak around the 800 handle, brothers, it's good to enter on the long side with, I mean, you might want to place a very tight stop loss if you want to, just below that 700 mark. But ideally, if you are targeting a positional way, then the stop loss would go around 1.05 and the potential targets should go around 1.13, just about 1.11, because that's just a minimum target. It's just an official print about 1.12. It's not going to stop there. I mean, it would be, many traders would get in on the long side after that as well, because those who are trading just simply price action, they would get on a break above 1.1275 on the long side. That would instill more strength in euro. It's not the right place to enter though, but price action traders like to do that. All right, so it's targeting towards 1.15, possibly 1.16 and 1.17 as well. So please remain on the long side. If you're still not built, it's good time to build on the long side, sir. All right. That's the story in the euro. Gold, we are looking for a potential top to carve before selling it. And the next story is the dollar index. It's carved a lower degree, I mean sub-minute degree wave 4. And sub-minute wave 5 could be in the making. All right. And it is potentially targeting 101. Uh, and it's not ending there. Actually, a 101 is just a small target. It's actually going below that 100 mark, even lower towards 97 and 95. So, because by the time it reaches, uh, it completes the sub-minute wave 5, it is just minute wave 3 complete, and then we can expect minute wave 4 rally, and then minute wave 5, which will be only minute wave 3 complete right there. All right. And it would still be incomplete in terms of the wave structure. So we have minute wave 4 somewhere right there, and then minute wave 5. It brings us to 95, and that particular line is also the channel support line for the entire structure to complete. All right. So we are basically midway, believe it or not, in the dollar index and in the euro USD, possibly in pound as well. There is still much room for decline in the dollar index and rally in the euro. And if I zoom in, possibly, is it? I don't think it's an impulse lower. And if it is an impulse lower, maybe it has produced an expanded flat wave 2, wave 1, and expanded flat wave 2, and then wave 3 is possibly underway. Or maybe, worst come scenario, there could be one more high towards 104.90. That's the worst come scenario. All right. So, and if you look at the RSI, there you are. It's hovering around 60. It's reversed from the 65 mark. So all in all, the corrective wave might be complete, and the expanded flat structure, it has taken quite a bit of time I mean, it started from 11th of March, almost all the way through the entire March series, and possibly we are now beginning to look up to the April series to almost perform the same way that it has done in March. All right. So trading point of view, selling around now, between now and 104.90 cannot be ruled out. Stop loss ideally goes around 107 if you're trading the 8 cap provider. If it is any other provider, kindly look into the price action wave 1 termination and place your stop just above that. And potential targets are now pointing towards 101, possibly 100 and 99 and 97. All those downside targets should be met. All right, going forward. All right, next is GBP USD. The story remains unchanged for now, as we are still progressing into the minute wave 3 higher, and the minute wave 3 is subject to print above 1.3435. So if you don't want to take that kind of a risk of 1.25, and if you want to still be in the trade with a very tight stop loss, you can place it right below that low 2800 something, right? But it's always, I mean, I would not say it's the safest place to place the stop loss, but it won't be technically incorrect because we've got a corrective decline, a complex corrective decline in place, and possibly 1.28. It's a good level to support. All right. So long in the dollar, in pound USD, ideally stop with around 1.25 and potential target around 1.35, 1.37, and even higher. No change there. And finally, if we bring the bitcoins and the dollar index into picture, Bitcoin is pulling back, but the rally might not be over yet. It is taking its own time, but the rally might still not be over yet. Maybe it drops towards a 38.2% or a 50% and then builds up again on the higher side towards 93, 95 or at 91, 95 kind of a mark, and then reverses lower again. All right, so that could be we are going to be watchful around the 91, 94,000 mark to sell Bitcoin potentially with a stop around 109 and potential target around 55 or so. I think Bitcoin has already carved a potential top, a meaningful top in place around 109. All right, and finally moving ahead with the Dow Jones. Again, don't get carried away with what is being seen here. It's not something that bulls are back in control and they are going to trade higher for a new high. It's just a corrective wave where we've got wave A, wave B, and wave C could be complete or wave C is still underway. All right. So I think the best place for Dow Jones to form a lower top is between 43,300 and 44,000, brothers. By that time, we should be good in a good position to initiate short positions. All right. So those are the stories as we move into the New York session, and let's bring it a pause here. We will now be back on a Monday Asia session, Tokyo Sydney overlap. Sunday 7 p.m. Eastern and Monday early morning on the eastern side of the world. All right. So once again, thank you for tuning in, and I think the stream was okay this time. There was no problem as last session, and we are good to bring a pause here. Until the next one, please do take care and God bless, and thank you for your time. Goodbye.